Good morning from the Protos newsroom. The date today is Friday the 12th of February, and you're listening to the Protos Daily. These are the main headlines this morning. The Motherload Bitcoin giveaway scam has bagged another $1 million in less than a week. Tesla has seen $50 billion shaved off its market cap since its $1.5 billion Bitcoin investment. And JayZ has apparently teamed up with Jack Dorsey to launch a Bitcoin development fund. At the current time of publication, Bitcoin is trading at $47,800, up 0.5% for the day. Cosmos has been the biggest top 20 gainer for the day, up 28%, and Doge has been the worst, down 8%. A complex web of Bitcoin giveaway scams has stolen more than $8 million in Bitcoin over the past 6 months, with $1 million of that snared in just 1 week. Since August last year, the sneaky mofos responsible have lifted around 176 Bitcoin, which works out on average to be around $1.36 million per month. Most of this was fished through fake Bitcoin giveaways using likeness of billionaires Chamath Palihapitiya and Elon Musk, who to our knowledge has at least 5 scams operating in his name. Tyler and Cameron Winklevoss also feature in a few, but they're nowhere near as popular or effective as those targeting Chamath and Musk. Sorry fellas. What's curious about this case is that the address storing the stolen coins, known as the Motherload address, has never made a withdrawal. Instead, the fraudsters seem content to hoard the stolen Bitcoin. So, where's it going to end up when it's finally cashed out? Truthfully, nobody has a clue. But you better believe you'll know it as soon as we do. So we all know that Tesla recently bought a butt-ton of Bitcoin, $1.5 billion worth to be precise, and that the purchase pumped the crypto to crazy new highs. But unfortunately for Elon and co, it's not had the same effect on the company's own share price, and investors are getting twitchy. Tesla revealed on Monday that it spent 8% of its reserves on 43,000 Bitcoin in January, with Bitcoin's price quickly climbing past the $48,000 mark for the first time. The thing is, Tesla's share price dipped by 7% in the same time. That's about $50 billion drained from the company's market value. Take into account crypto's infamous volatility, and some people are starting to question whether CEO Elon Musk's risk-taking has made things a little too hot. For example, earlier this week former analyst and Bitcoin skeptic Gary Black offloaded his Tesla shares, tweeting, "Tesla has always been higher risk, but investing $1.5 billion in Bitcoin makes it more risky." And even Musk's younger brother, Kimball, has sold 30,000 shares worth roughly $26 million. Although he still has a crazy amount left, so he's not exactly jumped ship just yet. Whether or not we're about to see an investor exodus from Tesla might be a moot point for Bitcoin, with more companies, including Apple, Amazon, and even Walmart, tipped to follow Musk's risky lead. A newly published paper by Finnish academic Dr. Klaus Grobus has uncovered a delayed effect on Bitcoin's price following crypto exchange hacks. The paper studied 29 exchange thefts between 2013 and 2017 for effects on crypto volatility, and discovered that Bitcoin volatility increased on the day of an exchange hack, while Ethereum volatility didn't. Dr. Grobus also notes that Bitcoin volatility usually subsides in the days following the attack, but sees significant subsequent spikes, usually after 5 days. Bitcoin stolen from crypto exchanges also affects uncertainty in Ethereum markets, with a time delay of 5 days. According to the report, this could all be due to the fact that hackers often steal crypto from smaller exchanges with less security, so it takes a little while for the effects to spread through the market, something which is not the case when larger platforms are attacked. Math aside, the research includes an interesting theory on how the delayed response between Bitcoin and Ethereum could meld with options trading strategies to maximize profits in derivatives markets. If you want to learn about all this in more detail, then head on over to protos.com. Jack Dorsey, the serial entrepreneur behind Twitter and Square, has announced a new collaboration with hip-hop legend JayZ, which will see the duo create a fund aimed at boosting the development of Bitcoin. Dubbed B-Trust, the fund will give 500 Bitcoin, or around $24 million, to the development of the largest cryptocurrency by market cap, with the initial focus being on funding individuals in Africa and India. In a tweet, Dorsey said that B-Trust is looking for 3 board members, with applicants invited to submit their name, email address, and proof of work in a Google form. Dorsey and JayZ appear to have struck up something of an unlikely friendship of late, with the pair photographed last year enjoying drinks on a yacht, leading to rumours that Dorsey was plotting a buyout of JayZ's music platform, Tidal. Whether or not a potential acquisition is on the table, we simply don't know. What we do know, however, is that JayZ now funds the development of Bitcoin, and we didn't think we'd be reporting that when we woke up this morning. Have a great weekend. Thank you for listening. To stay up to date with the latest from the world of crypto, make sure you subscribe to the Protos Daily on Spotify, Apple Podcasts, and all other major podcast providers.